there may be a cut in August, so we're expecting another 25 basis point cut there.
Emily, welcome back to Dukascopy TV. It's a pleasure to receive you again.
Thank you for having me.
No problem at all. Now, firstly, I wanted to know kind of what you're watching at the moment in terms of, that macroeconomic agenda, the political space, overseas also, and just in terms of what is the current litmus test really for Australia's economic health.
Yeah, definitely. So there's a few indicators that we're looking at in Australia's economy. Firstly, the labour market indicators are very important for looking at the domestic conditions. So while we've seen employment growth looking quite strong, the underutilisation rate has actually been quite elevated, and that's indicating there's still a bit of slack in the labour market. So we're keeping a close eye on that. On the external front, we're obviously looking at China in terms of export demand and the strength over there in terms of demand for our commodities. There have been a couple of events globally that have sort of hurt investor sentiment and business sentiment. So we're keeping an eye on that, but we're not too concerned at this stage.
You mentioned China there, and I just wanted to query on that. Obviously, we saw a huge ream of data come out of the Chinese economy last week, providing quite the mixed picture really on that economy. What implications does that China figures have on the local currency, on the Australian dollar?
So as we saw, the Aussie dollar actually sort of shot up straight after the GDP figures came out because they were quite positive on the front there. However, when you look closer, there was quite disappointing investment figures, especially as that overcapacity in heavy industry continues to drag. And that actually pushed the Aussie dollar back down a bit, given our demand for our commodity exports is closely linked to that. So while strong Chinese growth is good for Australia, that falling demand for our commodities is obviously going to put downward pressure on the dollar.
So let's close in then on sort of the economic platform space, really. And obviously the next indicator that economists and market watchers are really keeping an eye on are those inflation numbers coming out at the end of the month. And that really is going to provide the guide for the Reserve Bank's sort of next step in terms of policy action. Where is Glenn Stevens going to be wanting those CPI numbers to land?
Yeah, so those CPI numbers for the last quarter were particularly disappointing, falling over the quarter. So obviously Glenn Stevens will be looking at to see if that's returned to positive territory and whether the rate cut previously has provided any upward boost to domestic demand and price pressures. We're expecting that the quarterly growth rate will return to positive territory, but the annual rate will remain below the 2 to 3% target range. So we'll probably see the RBA looking to those figures.
And how does that shape then your expectations for policy moves from the RBA? Do we see a cut in August perhaps?
Yeah, so we think that at this stage there may be a cut in August, so we're expecting another 25 basis point cut there. Obviously, if we see surprisingly strong figures, we might revise that back, but at this stage we're expecting, because they'll be below that 2 to 3% target, we'll see another cut.
Emily Dabbs there from Moody's Analytics, providing her insight into the Australian economy. That's all we've got time for right now. I'm Natalie MacDonald. You've been watching Sydney Direct on Dukascopy TV. Goodbye for now.